All right, let's get right into it. We're going to break down one of the biggest and honestly most daunting challenges facing the UK today, this enormous mountain of debt. And this isn't some abstract economic issue. It's a story that affects everything, from your mortgage to the future of the NHS.
So what are we talking about exactly? £2.9 trillion. That's the big, scary number, the total amount the UK government owes. And to put that into perspective, it's now officially bigger than the country's entire economy, everything the UK produces in a whole year.
And here's the real kicker. This isn't a static problem. That number is climbing at a breathtaking pace. Every single month, that hole gets deeper by another £17 billion. This is what's turning a slow-burn, long-term problem into a full-blown, right-now crisis.
Which leads us to a question that, until just a couple of years ago, would have sounded absolutely crazy. For literally centuries, British government debt was seen as one of the safest investments on the planet. So you have to ask, how on earth did we get here?
For a long time, government borrowing wasn't the problem, it was the solution. It's how the UK rebuilt after the war, how it funded the welfare state. It was a useful tool. But then, a series of massive shocks hit the system, and that useful tool, well, it started to look a lot more like a dangerous trap.
If you look back, you can really pinpoint the moments where everything changed. You can see how debt, which was once a pretty manageable part of the economy, was just sent rocketing upwards by three major global events.
The first big red flag started waving back in the 70s. An oil crisis sent inflation into double digits, and suddenly investors started looking at British debt and getting very nervous. Things got so bad that by 1976, the UK had to go to the International Monetary Fund, basically the world's financial emergency service, for a bailout. It was a national humiliation.
So the country weathered that storm. But the next shock was a whole different beast, the 2008 financial crisis. To stop the entire banking system from just collapsing, the government had to borrow billions. And that, right there, was the point of no return. For the first time in modern history, Britain's debt started growing way faster than its economy.
And then the pandemic hit. This was like pouring gasoline on the fire. With interest rates slashed to pretty much zero, borrowing money was practically free. So the government opened the floodgates to support the economy. The result? Over £600 billion was added to the national debt in just 3 years.
Okay, so you can see this has been building for decades. But the big question is, why is it a crisis now? The game has completely changed. For decades, the UK was kind of shielded from these shocks, but that advantage? It's basically vanished. Let's break down why.
This right here is the core of the danger. In the past, most UK debt was long-term. Think of it like a fixed-rate mortgage. You've got breathing room. But today, over a quarter of it is short-term. That's more like a credit card bill. When interest rates go up, the pain hits the government's budget almost immediately.
And that immediate impact is just staggering. Just paying the interest on the debt now costs the UK over £100 billion a year. That's not paying the debt down, by the way. That's just servicing the interest. It's money that could have gone to schools, hospitals, or pensions, just vanishing into thin air. To put that number in perspective, the UK now spends more on debt interest than on the entire national defense budget. And it's rapidly catching up to what we spend on the whole education system. That is the stark reality of the situation we're in.
This loss of confidence came to a really dramatic head in 2022. The government, led by Liz Truss at the time, unveiled its now infamous mini-budget. And the reaction from global financial markets? Well, it was brutal and it was immediate.
In a matter of days, a plan to borrow tens of billions more with no real explanation of how to pay for it caused the markets to just panic. Investors started dumping UK debt, the pound crashed, and the Bank of England had to step in with an emergency bailout just to stop the financial system from breaking. It was a shocking reminder that Britain's reputation for stability is not guaranteed. Trust that took centuries to build was almost lost overnight. The crisis lasted only a few weeks, but the warning was crystal clear. So, facing this new reality, what can actually be done?
And this is where it gets incredibly difficult. Because when you boil it all down, there are essentially only three paths forward to deal with the debt. And frankly, none of them are attractive. It's what you could call a debt trilemma.
Each one of these options comes with severe, painful consequences for the country, for the economy, and for ordinary people. There really is no easy way out of this.
Okay, option 1, cut spending. Sounds simple in theory, but the last time the UK government actually ran a surplus was over 2 decades ago.
To close a gap this big means taking an axe to the very services people rely on. We're talking healthcare, pensions, welfare. In a country where many feel things are already broken, this is politically explosive.
So raising taxes is the alternative, but the UK tax burden is already at a multi-decade high. Pushing it even higher would squeeze households that are already struggling with the cost of living, and it could choke off the economic growth that's desperately needed to get out of this mess in the first place.
And then there's the final option, simply printing money to buy up government debt. This is by far the riskiest. It would pour fuel on the fire of inflation, but more importantly, it would send the worst possible signal to investors, that Britain can no longer pay its bills honestly. That could trigger the very financial collapse everyone is trying to avoid.
So you see, this isn't just about balancing the books anymore. The outcome of this crisis is going to define Britain's place in the world for decades to come. It really strikes at the very heart of the country's reputation and its entire future.
Which leaves us with the final, crucial question. Is this just another financial storm to be weathered, like Britain has done in the past? Or does it mark something deeper, a fundamental decline for a nation that was once seen as the world's safest borrower? The choice, and its consequences, are now unavoidable.